Welcome to this Premier Training revision video that takes a look at how to post the figures in the Purchases Daybook and the Purchases Returns Daybook to the ledgers. In a previous video, we saw how to complete the Purchases Daybook and we left the figures like this. When posting to the General Ledger, the only figures we need at this stage are the totals we've calculated for the end of the month. There's the grand total, the VAT, and the net total. We need 3 T accounts in the General Ledger to post these figures. These are the Purchases account, the VAT account, and the Payables Ledger Control account. Purchases are always a debit. Remember, we're not purchasing VAT, so we need to use the net figure, that is, the figure without VAT. We'll enter the date, here for the end of the month. Then in the details, we'll put where the information came from. Then we'll enter the net figure as a debit in the Purchases account. Next, we'll post the VAT. VAT on these purchases will also be a debit, following the same side as the net purchases we've made for the period. Again, we'll enter the date and the details in the VAT account as before, and then the figure for VAT. The Payables Ledger Control account is where we record what is owed by us to our credit suppliers. In this account, a credit will increase what is owed and a debit will reduce what is owed. We'll again put in the date and the details. As we will owe our suppliers for the goods and the VAT, it's the total amount which goes here, and it's a credit because we've bought more goods and so owe them more money. The figure in the Purchases account plus the figure in the VAT account will add up to the total purchases price. And if we quickly add up all the debits and then all the credits, you'll see that the debit figure is the same as the credit figure, keeping the general ledger in balance. It's always a good idea to check that what you've posted balances before moving on to the next transaction. We haven't quite finished with the Purchases Daybook yet, so let's take another look at it. We now need to record the details for each supplier separately in their own T account. In a real business, if it's large enough, this task would most likely be performed separately by someone in the Payables Ledger department. But in your AAT assessment, you'll be required to complete both the General Ledger and the Memorandum, the subsidiary ledger. This information must also be accurate and timely, as the Payables Ledger will be checked from time to time to ensure that the total of all the individual suppliers comes to the total shown in the Payables Ledger Control account. We record the figures in the credit side of the accounts, just as we did in the Payables Ledger Control. And in the individual supplier accounts, we only need to know what we owe to each supplier, so only the gross figure is needed here. First, Rock Limited. And in the Payables Ledger, we need to use the date from the original invoice and not the date for the end of the month. Then we show the invoice number, as this is more useful than just putting the Purchases Daybook. And finally, the gross figure for Rock Limited from the Purchases Daybook. Now we do the same for Paper plc, and finally, Scissors & Co. Now we've dealt with the Purchases Daybook, we'll look at the Purchases Returns Daybook. In the previous video, we left the Purchases Returns Daybook like this. Again, when posting to the General Ledger, we'll only need the totals. The grand total, the VAT, and the net total. Once again, we'll need 3 T accounts in the General Ledger to post these figures. This time, it'll be the Purchases Returns account, and the VAT account, and the Payables Ledger Control account. As purchases are always a debit, purchases returns must therefore be a credit. Again, we use the net figure for purchases returns as we don't purchase VAT. But first, let's enter the date, here at the end of the month. In the details, where the information came from, and then the net figure as a credit in the purchases returns account. Next, we'll post the VAT, and the figure for VAT is also entered as a credit, following the same side of the ledger as the purchases returns it relates to. So we'll enter the date and the details in the VAT account, and then the VAT figure itself. Remember we said a little earlier that in the payables ledger control account, a credit will increase what we owe to our credit suppliers and a debit will reduce what we owe. As we've sent goods back to our suppliers, we'll naturally owe them less in both purchases and VAT. So the entry here will be on the debit side of the account, reducing what we owe. But first we'll put in the date and the details, and then the total for our purchases returns. The figure in the purchases returns account plus the figure in the VAT account will add up to the total value for our purchases returns. And again, if we quickly check our debits with our credits, we can see that everything remains in balance. Now, we still haven't quite finished. Let's look again at the purchases returns daybook. Of course, we need to record the individual returns to each supplier separately in their own account. And we record the figures in the debit side of each account, just as we did in the payables ledger control account. In the individual supplier accounts, we only need to know what each supplier has been debited, so only the gross figure is needed here. First is Paper plc. Remember, we'll use the date of the original credit note here, not the date for the end of the month. And then the credit note number, and then the gross figure for the supplier from the purchases returns daybook. Now we'll do the same for Rock Limited. Again, this information should be accurate and timely, as the payables ledger will be checked from time to time to ensure that the total of all the individual supplier accounts comes to the total shown in the payables ledger control account. I hope you found this Premier Training revision video helpful, and thanks for watching.